market or currency market, and down here we have some activity going on in the stock index futures also. So that's just to let you know how active we are right now in the marketplace. All right, now as I mentioned before, just to recap that, with trending patterns, you want to pick out, you want to select trending patterns in your filter, and you want to also select that very strong or high rating. Okay, if you move up to 10 on the rating, you're going to get a highly rated initial trend rating, but uniformity rating. However, it doesn't necessarily mean the other indicators are going to be that strongly rated. I like to keep it at about 6 so that I can have a fairly good universe to select from. If I make it too high, then I will make too many restrictions on the pattern, and I may get a very small sample to trade off of. Okay, if I set it too low, then I will get too many patterns, and it'll be very hard to make a decision. So you want to start out with 6 as a pretty good indicator and a pretty good builder of a universe. And the same with the non-trending patterns. Okay, you want to select that indicator about 6, and you want to use it with non-trending patterns, and that helps you cut down on your analysis time. Now again, working with uniformity, you have to realize that with AutoChartist, when you look at these indicators here, that the initial trend has to do with how the market is behaving going into the beginning of the pattern, while the breakout has to do with how the pattern is, what the pattern is rated on a particular breakout. So the initial trend and the breakout are paired together. Okay, we've covered that at a previous webinar. And therefore, the uniformity and the clarity go together with what's going on in between the support and resistance line, and also what's in between this initial trend and this breakout. So these two deal with the likelihood of a pattern breaking out or succeeding to an objective, where these indicators, this uniformity and clarity, have to do with how the pattern appears to the trader and what the aesthetics is inside this. So you want to pair these two as closely together as possible when you're doing your searches. What I find is that I don't want to have put demands on the program to find a very highly rated uniformity pattern, but then keep my clarity low. I like to start out with both of them looking for a highly rated pattern, usually typically equal or better. So when I'm working with like high uniformity and high clarity for the FX majors, I want to go into my filter and I want to make sure that I can set my clarity at 6, and I can go down to my uniformity and also set that at 6. Now I have the opportunity to even select patterns that I want to look for example, trending or non-trending. But in this case, let's just do a search for high clarity and high uniformity patterns, and that should help us out. All right, it's crunching through here. And it's just a matter of bringing up the picture right now of a high uniformity and a high clarity FX major chart. All right, there's an example of a market that gave us a high uniformity rating and an equal or higher clarity rating. And again, you could see that the market was a channel. So in these channels, you're going to see these long swings, and you're going to see these relationships between tops and tops and bottoms a little bit clearer. You also can see a lot of these touches here that demonstrate how strong support is. There's one touch, and then there's two that are pretty close, and then here there's a few in a row that pretty much provide us with information that tells us that this support is a pretty strong point. So that's what you're getting with a high uniformity, and you're getting the clarity is telling you that this market is smooth and there isn't a lot of gaps or market noise. So that's why you want to pair these two together. Now that's also a channel down. If we went to a triangle pattern, you can see too that that showed us uniformity, helped us out by showing us a number of touches. That helps us define what resistance is, and as the market compresses, as I said before, that gives you a stronger indication that if this resistance does get violated, that you can have a little bit more confidence in a particular rally. And as we go through these patterns, you'll see we also have a rectangular pattern forming in the Australian dollar, and that has high quality or uniformity and clarity. And this is for the person who wants to trade the swings by buying support and selling resistance. So you'll know that it's a pretty clearly defined numbers when you deal with when you set these indicators at high ratings and pair them together. Okay, so that's why you want to work those two together. And again, you want to work uniformity with clarity, and you want to work initial trend with the breakouts when you're doing these searches. Okay, we have another question coming up, and that would be question 2. And let's take a look at that question. Okay, that's the question relating to clarity or uniformity and non-trending patterns. All right, looks like we have a pretty good response there also, and it's a fairly highly rated score, so I did get the point across and you were paying attention, so that's very good. Appreciate it. And let's move on to some other examples here. Now, if you can see, what I'm trying to do in the webinar is to show you bits and pieces on how you can filter for these particular patterns. If you do it in such a way that you just set it at the defaults, you tend to have to shuffle through a lot of lists. So once you start to work with patterns and you start to see what you believe is to be the pattern of that looks appealing to you, then you'll learn how to work the indicators. Another way to look is to watch randomly selected patterns and see what AutoChartist has rated these patterns, so that you can get an idea also of what is appealing to you. So you can do it both ways. You can set it up ahead of time, or you can let AutoChartist find a pattern that's appealing to you, then go back and say, okay, I like this channel, and I'm going to set my uniformity here at 6 or my clarity pattern higher. That's how I studied and experimented with it. I started to look through patterns, and then I started to look at what these minimum ratings were, and that would give me an appealing pattern. So when you do your study and your research, that's one place to start. Now, another area that we can work with for this high uniformity and clarity is the stock index CFDs. You can see here that this was a pennant formation and heavy volatility in this market. But you could see that we did have uniformity here again, bottom to bottom, top to top. And what I mean by uniformity is really how many days or how many time periods between each cycle. That gives you a clear indication that there's some uniformity or symmetry taking place in the market. Here's a Japanese stock market, and this was a pennant formation. Australian dollar, a little bit clearer on this particular channel and before the breakout. So again, these are highly rated uniformity and clarity ratings that are giving me these patterns. Here's a rising wedge on an emerging pattern, and that suggests that something is going to be taking place here in terms of volatility, because this wedge has narrowed to the point where these candlesticks are beginning to coil a bit. So this is a good one to watch for some kind of volatility breakout. Okay, now another factor that we want to look at when dealing with the uniformity indicator is to watch the length also. As I said several times at several webinars, that I have no problem with 15-minute charts or 5-minute charts, provided that you set up a reasonable length filter. You have to remember that markets are making patterns all the time. So to get a benefit from working with these patterns is you want to make sure that you give the market enough time to work inside of a channel, for example, or inside of a triangle. If you're looking for a triangle, and you could see from the past that these compression points give you a better opportunity to trade, or a better read on when the market's going to move. You want to make sure that you have plenty of time inside that triangle to give traders a chance to see it. Okay, you want to make sure that there's plenty of eyes on it, especially the bigger traders or the institutional traders who provide the money that fuels some of these moves. Okay, you don't want to be caught out there by yourself trading a 15-minute pattern while the rest of the market is trading an hourly or a daily pattern. So if you're going to use a short-term time period, then you want to, it's like an inverse relationship. You want to have a long, your length set fairly long. And I try to, in that case, I try to select 100 or better when I go through my length indicator. Okay. So when you're, as I said last week in clarity, with the clarity webinar, that you want to make sure that when you're dealing with something that is where aesthetics is important, that you want to have a very long length. So here you can see the market spent a lot of time, 168 hours inside this channel, and now it's beginning its breakout. So as a trader, that gives you a little bit more confidence that this move is going to be real, because it spent so much time in this, and now that we are getting the breakout, that should give traders confidence that this break is real and that the market may be shifting. And you can remember, if you watch the British pound US dollar over the past 10 days or so, it's been in a very long, prolonged down move. So maybe an oversold indicator is giving you confidence to look at this particular market, and then auto chartists will come in with its breakout pattern, and that's how you can pair your analysis with this program. So it's a very good tool to use. But I think the key here is that it's finally breaking out after a 168-hour decline. Okay, when you look at a market like a Japanese yen 15-minute chart, you can see clearly defined trend inside this triangle, but once it breaks out, you tend to get this whipsaw effect. Okay, and I think a lot of that has to do with that it's a 15-minute chart, and it's very sensitive to news, and it can move in either direction. Okay, when we're looking at a 30-minute chart, you can see that that 15-minute whip action isn't there, that the market clearly broke support and hit a target zone. And I think these two here are really the epitome of what can happen when you're dealing with different time frames. Okay, gives you an opportunity to, the longer time frame gives you an opportunity to trade in one direction for a longer period of time, where the 15-minute keeps you on guard, and you have to be willing to change directions a lot. Here's a 60-minute or 191 length on the U.S. Canadian dollar. And again, you can see by just giving it enough time that you can really see how this market does